All right. Good afternoon, everybody. Event Trader coming on here. Just watching the equity markets, which are S&P down just about 1% on another day of selling as the tariff concerns continue to take grip of sentiment in the market. And it is with this backdrop that we welcome in Options Trader for our weekly options playbook discussion to get his thoughts on the markets and some general theories around what we're seeing on put call ratio and the VIX, as well as a few stocks that are jumping off the radar to him. So, without any further ado, Brandon, how are you doing today?
All things considered, doing pretty well. How about yourself?
And can't complain, can't complain. You know, watching these markets melt down a little bit did catch a nice bounce at least. So just watching that play out. Tempted to actually add back to it right now. I still have a small piece on. Had been eyeing up that 58, 25, 30 area. We got to about 58, 22 before that reversal. Felt like a lot of people trying to lean on it. And, I'm still seeing some momentum on the charts there to the upside. So should make for an interesting close because, as we know, that could easily get erased pretty quickly in this market.
Yeah, I'm sure there's going to be a daily fear for a little while of, what headline will I wake up to in the morning? Obviously there's a speech tonight to add some volatility there. So yeah, it could be an interesting close. Might be an interesting close for the next 4 years. So get ready.
Yeah, yeah. At the rate we're getting headlines, that's not out of the question, right?
Right.
But we'll see. I mean, be curious to see if we at some point hit kind of a level of saturation. And I kind of feel that's what's going to happen tonight with the State of the Union. I can't imagine that there's any additional things that he's going to say, outside of what we've heard for the last 2 months, really the last year on the campaign trail. So I feel like it's going to be more theater than news tonight, but should be interesting. Kind of curious to see how the Democrats act as well. Whether or not they in terms of how contentious they want to get in the chamber tonight. So it's going to be an interesting speech, that's for sure.
Yeah, so I haven't read a ton about it, to be just totally honest, but I did read some commentary from Stephen Miller, giving a little bit of a preview, and probably no surprise, but it does sound like he's prepared to lean into the tariffs quite a bit. Again, probably not shocking, but if you look at the markets today, the markets aren't exactly screaming that they love these at the moment. So if he comes out with even, some more fiery rhetoric on the tariffs, and like you were just saying, we already got a little Twitter battle or social media battle going between world leaders over tariffs. So yeah, I mean, if he comes out swinging even more, I mean, I don't know. I would think that would maybe put a little pressure on tomorrow, but who knows? The speeches might have maybe been
Yeah.
changed 15 times since he came out and said that.
Yeah, no, I mean it'll certainly be interesting to see how he comes out. I think the part of the market's problem was everybody just thought that he was bluffing and that they were kind of looking at tariffs in a way that it was never going to happen. But obviously it is. It's going on. I don't think he really had much choice. He couldn't pull back at the last second because then all the tariff threats would have looked pretty toothless moving forward. So they are pushing forward on this. But to your point, we're not really seeing anybody backing down. In fact, one gets the sense that world leaders feel the need to step up to Trump. We saw Zelensky um, get rambunctious back on Friday. You're seeing Scheinbaum, you're seeing Trudeau, especially if you're, one of the leaders of the left like Trudeau. I think it's you have to carry that, right? So it'll be interesting to see how it falls out, but hopefully it cools off a little bit. So it's something that we'll be tracking for sure. But for my money, I don't think that the State of the Union is going to really provide any new news or anything that we haven't gotten here. But again, Stay tuned, right, Brandon?
Yeah, exactly.
Okay, so just one quick thing. Watching headlines here, Citigroup out at I think it's a Barclays conference, but saying that Q1 momentum in FIC and rates business is going pretty well, and Q1 revs expected to be up in the mid single digits, and the M&A pipeline looks pretty good. IB fees looking to be about flat year over year, but I was kind of watching some of these bank earnings because obviously growth concerns are a big item. Now, I'm not seeing anything on loans, so that's something I'll keep an eye out on. But just be aware that Citigroup is, yeah, it's at an RBC conference. So we'll keep an eye out on any comments, see if anything of note comes. So, Brandon, let's talk a little bit about the markets. I know that you last week or the last couple of weeks have been talking about being a little bit more bearish on the markets. Obviously, that has come to fruition. So I'd be curious as to your thoughts here. Obviously, it's arguable that we've got a little bit of a flush out over the last couple of days. Now coming in to test the 200-day moving average on a few of the indices. Is there any patterns that are jumping out to you on any of the majors or anything from from a macro market perspective that is getting you to change your tune, or are you still pretty much steadfast in the bearish camp?
We got that kind of a hammer candle forming on the NQs at the moment. Yeah. Again, we've got over 2 hours of trading left, so
You,
that's
oh,
very
do you want me to have up the March continuous contract or for the NQs here?
yeah. I'm just on the NQs continuous, so that's perfect.
Okay, I'll switch over that, and we got the daily up. So
Yeah, so got that hammer candle reclaim of the 200. So just looking at that one candle, it's obviously a reversal candle. You know, to be determined if it finishes that way. So, you know, um, at this point, it is a pretty steep little decline. I know the question came up earlier about capitulation. I could maybe even argue that we saw a little bit of that. I would maybe argue that the volumes would just be a little bit higher in certain regards to really call it capitulation, but see maybe some signs of that in the charts. So, at this point, I maybe would want to wait for a little bit of a bounce before shorting again. But yeah, I mean, overall, I don't like the headlines. I know that people have different opinions on the tariffs and what's going to happen. I just don't see much coming that's good at the moment. Like you said, these leaders aren't backing down. They're official now, and I don't know. I just don't see much good coming out of it at the moment. Again, I could wake up tomorrow and I don't know. We could have a trade deal with three different countries and then some. So I don't know, but I don't think it's very good. And just with some of the other underlying stuff in the market, some of the option stuff that we'll talk about. Just thinking that there's still I don't know. I'm just still thinking the path of least resistance for me is to the downside at the moment.
yeah, and valuation's still not really in the favor either when you're looking at a 5% correction. For me, Brandon, I kind of go back to 2018 and what we saw there, and you can see, it was really just a choppy market throughout the entire time frame. That's of course the last time we're going through this trade war tat. That was pretty much just U.S. China going back and forth. Saw obviously a lot of supply chain disruptions going on there. So, to think that this is going to get taken care of in a snap of a finger, I agree that might be a little difficult. I'm real curious again to see some of these Q1 earnings and what people have to say about the supply chains and what kind of disruptions they're getting. But that's going to be an interesting backdrop throughout earnings season. But we don't get that until the middle of April, right? So,
Yeah.
uh, go
No,
on.
I'm sorry.
I was just going to say, I tend to agree with you. Here in the immediate term, it's tough to find something to really hang your hat on because you don't have valuation. fundamentals appear to be weakening, and I suppose you could say that the dollar is softening and rates are softening, which naturally would be favorable for equities, but doesn't seem like that's enough to really stave off the selling at the moment.
Yeah, one thing too, I think it was you earlier that had posted, we just, I think, officially hit correction territory.
Yeah.
We might have exited it, but I think on the S&P futures, it was what, down 6% from the highs?
Well, that's just from February 19th. The Nasdaq was down 10% from its December high.
Okay, so and that's not a huge number. um,
Yeah.
if we kind of look at the run that we've had in equity markets, and again, just look at some of the charts, the metas of the world that have soared for so long. I've talked to a few people lately, like, oh man, and this was even a couple days ago before we had even a further move down. Like, wow, this is a really deep sell off, and I was like, well, the market's down like 4% from the all time highs. Like, you might want to get ready for things to maybe get a little worse, because that's just kind of a blip on the radar long term, right?
Yeah, I mean, if you look at it on a monthly, right? I mean, just look at this monthly chart of the NQs. That, to your point, blip on the radar. Now, am I looking for a pullback to the 1700 level or something like that, where we were at the beginning of 2022? No, I'm not looking for us to erase 2 years of 20% gains, but there is that potential, and like we were just talking about, valuations are rich. So the market needs a win, in my opinion, and it would come in terms of economic data and growth. We got the jobs number, of course, on Friday, so that should be pretty interesting. We'll get ADP tomorrow for a little bit of an early peak. But if the market was to get a couple of solid econ data points that suggested that we aren't seeing a disruption, then that would be, I think, very helpful in trying to get a bounce. However, uh, and offset some of the weak sentiment that we've gotten. But that's the thing. So far, all we've really gotten is sentiment, which has tended to run a lot more negative. I mean, bitter's new black on the sentiment, right? But let's see how that hard data comes in, and that could be a big tell on where we're going next. And that jobs report in a couple of days here is going to be important.
Yeah, seems like a switch back to good news is good news kind of period, right?
Exactly, exactly. Because right now, everybody was looking for yields to pull in, but that was due more to weaker inflation data. We haven't really necessarily gotten that. Not saying that we're getting stagflationary numbers, but a lot of the data that we've gotten, well, a lot of the sentiment data that we've gotten has been negative and leading to that decline in yields. So that's going to be the big story over the next couple of weeks. And keeping an eye out, of course, on any sell side conference commentary branded on possible guidance. It's going to be big.
Yeah, I would agree with you.
So, all right, well, let's break into some of these numbers here then, and just kind of talk or some of the names that have been on your radar as of late. I know you're always throwing in ideas into the room, and a few of them that have been getting some interest here. One, Dollar General, ticker symbol DG. Now, if I'm not mistaken, I think that they report this week.
That's Dollar Tree.
Dollar Tree does. Okay, they usually report pretty close to each other. That's why I was figuring Dollar General might be reporting, but obviously a key read through. Dollar Tree and Dollar General with those tight margins, Brandon, they are certainly at the forefront of the tariff wars. Dollar General is reporting March 13th for what it's worth. That's going to be what, Thursday, right? Or next Thursday, I should say. But what were you seeing in the Dollar General chart here, Brandon?
Yeah, so I mean, if you look at that on the daily chart, I mean, just kind of a broken dead chart, really. I mean, it has just kind of been floating around there at the bottom, below all the major moving averages. And obviously, these are names that can get caught up in the potential tariff conversation. We also had the Target earnings, So if there was any sort of pressure in the sector, and I saw some put option activity on Dollar General yesterday. This is kind of one of those names where more times than not, when I found interesting option activity, it's made some pretty interesting moves. So kind of one that just catches my attention. So you had kind of three catalysts entering into the day to potentially push it downward on a broken chart, and I frankly put it in my morning notes, was thinking, hey, this is probably going to be a good one. And it just took off at the market open. Kind of one of those things where I just frankly couldn't really figure it out why it was moving. Dollar Tree's down, a lot of the staples are down. I don't know. There's probably something I'm missing out there, but just was a little surprised by it. But then I had put out an alert earlier. It just kind of started to climb on some lower volume. Started to see some reversal candles. Almost kind of started to create almost a little bit of a bearish ascending wedge on the intraday. So yeah, it just kind of started to see some things adding up, and again, I just was kind of bearish on it. So yeah, I'm still kind of watching it. It's just kind of sitting there floating around, the 73 and a half area. But now what's catching my attention is throughout most of the day, you've got a declining MACD, you've got a declining RSI. So it's sitting there, but it's kind of getting weaker by the candle. And again, kind of, if I had to put all my chips on the table, I would maybe lean to at least one more little rollover today. So, again, just a name that I didn't necessarily think that people would be rushing to jump into here at the end of the day. So, just kind of still watching for a fade back to the 72 area. Gavin, did I
Oh
lose
yeah,
you?
sorry. Yep, nope. You didn't lose me. Just the mute button did. Yeah. So as I said, Dollar Tree they're reporting this week, and I'm just kind of curious if you got any thoughts on them because naturally they'll be moving pretty closely with DG as well.
Yeah. So, yeah, that's another reason that I kind of like that trade is, you kind of got a few different catalysts out there. Not that you want to enter into an options trade and sit there and pray and hope that, catalysts make your trade work because that usually turns into a losing equation. But, it's always nice to have something in your back pocket in case you're wrong. Yeah, I mean, Dollar Tree, again, probably not something I'd want to go and get long before the earnings. But, just from a chart perspective, it maybe make a little bit of an interesting bounce opportunity. Just because it's pretty extended below its lower Bollinger Band, and you got a nice hammer candle forming on the daily chart. But yeah, again, I just personally don't see a ton of reason that you'd want to jump into this thing ahead of earnings with all the headlines.
Yeah. Okay. Well, we'll be keeping an eye out. Certainly, commentary around tariffs could influence trade around DG, and can't imagine, Brandon, that it's going to be anything good. I mean, tight margin as tight of margins as they run, it should be interesting to see how that unfolds. So, keeping an eye out on DG. Keeping an eye out on Dollar Tree as an early read on it. So,
Oh,
uh,
and Gavin, I'm sorry, I just remembered. Don't
yeah.
necessarily need to put these up because we can probably visualize them, but just kind of looking around. Speaking of the staples, you got some, kind of textbook at the moment, shooting star candles forming on both the Pepsi and the Procter and Gamble daily chart. So. Just again, you've kind of got the Target earnings that came out. They definitely expressed some caution. You've got kind of textbook reversal candles on two of the top holdings within the XLP. Yeah, again, I think like many, kind of always like to find many things in a sector that kind of might make everything move together. So I think kind of worth watching some of those, especially with the fact that like you just said, I mean, most likely you would think the headline right now would be negative versus positive.
Yeah, yeah. So I would agree with that, and definitely a group to watch. Uh, you you would have to think too, Brandon. Probably some of these people saw the staples pop up, maybe felt that they were looking at lows in the markets and rotating back over there, right?
Yeah, no, I would agree with you.
So we'll keep an eye out on that. Speaking of which, let me just ask you real quick: what do you think of Google's move today? I mean, that's
Yeah,
up nearly 3%.
yeah, I
I know you follow it a lot. I know we hadn't discussed this prior, but just kind of poked into my eye because I thought this was one of the more intriguing charts, just trying to get a sense of where sentiment could be going right now.
I mean, if you asked me to pick one trade entering today, it would not have been to buy Google calls at the
Right?
open, just be honest with you. But I mean, yeah,
Yeah, it looked
almost
like it was setting up for a puke down below the 200, right?
Yeah, I mean, it's almost got the bullish Marabozo, and it's a bullish engulfing at the moment. So, I suppose if this thing closes near the highs where it's kind of sitting right now, it's probably worth watching for a continued bounce with the assumption that the market wasn't getting smoked. Just because a quick little retest back up to that 200-day is not too far off. If again, that be contingent on the market bouncing. But something like that kind of intrigues me where, if you woke up in the morning and we were seeing some strength in the market of, maybe just going and buying like the 175 call at the open. Again, if you thought it was going to bounce.
Yeah. All right. So we'll keep an eye out on Google. Next thing that we want to talk about is a mega cap tech name. AMD, Advanced Micro Devices. This thing's been on a pretty steady decline here. I mean, that's about as much of a descending triangle on the daily as you'll see, right, Brandon? Going back to October when we're up around that 170 area. This has been cut down just about 45% from that level there. You can just see that 20-day moving average basically looks like Matumbo right now for bulls in that trade. So, what was sticking out to you on AMD, and what had you thinking that you want to keep an eye out on this?
Yeah, so this actually kind of goes back to the question about capitulation in the chat room earlier. Size Playa was talking about kind of dabbling at these levels. This is kind of one I've had on my radar a little bit. It just kind of seemed, again, just like you said, I mean, it's been in a pretty defined downtrend. So, it's not necessarily saying that that's going to come to an end, but at this point, I feel like in AMD in 2 years, we might be, on this call saying, oh boy, I really wish I had bought more AMD when it, went down to, 96 kind of thing. Um, so just, I think, again, I'm not jumping out into a bunch of calls or longs right now, but just kind of addressing the question. Seems like a potentially interesting place to dabble. And just looking at kind of just the candle today, I mean, similar to Google. I mean, you got the bullish Marabozo. As of right now, the daily candle is a bullish piercing line. The piercing line is not a candle that I per se, drop everything for, but it is a bullish technical candle, and if it pushes a little bit higher, it will be a full bullish engulfing. And again, finishing right near the highs of the day, if again the market were to get a bounce, which is a big old asterisk with everything going on tonight, but this seems like a candidate to maybe get a little bit of a follow through where maybe you could dabble if that was kind of we were at levels that's what you're looking to do, or again, might be a interesting candidate if the market is going to bounce to maybe bounce a little bit higher up to the 102-ish area where you could pick up a quick call in the morning kind of thing.
All right. Speaking of bounces, getting alerts on two names bouncing here. One, Deer, DE, back up through that 460 level. This had been dodging most of the tariff headlines, but that ran out of luck on there. And the other one's Twilio, TWLO. So let's keep an eye out on some of the software names out there. That are moving in. A few others that are moving into positive territory here, Brandon. Ethereum and Bitcoin, they're both rallying late. Arc Innovation, bots has moved into positive territory. So definitely some of the riskier assets in play there. Solar, of course, continues to lead. Nice engulfing Mariposa there, Brandon, and the TAN. Semiconductors as well, SMH. A little bit of a hammer pattern going on there, and cybersecurity with CrowdStrike on tap later tonight. So, all right, Brandon. Next name up, Cameco, CCJ. Usually don't dabble too much in the materials, but there was a comment on the page that caught your eye, and this chart in particular. So, what are we looking at here in uranium miner Cameco, ticker symbol CCJ?
Yeah, so for my full disclosure, I don't think I've ever looked at this chart prior to Friday. The in-play team had posted, about some of the headlines on the potential minerals deal, and this was one of the related tickers. And I was just kind of running through some names that night, and this one kind of caught my attention for a couple reasons. For starters, it has a bullish descending wedge that was forming on the daily chart. So got a little bit of a technical pattern. On Friday, it had some pretty decent call volume to it too. So when you've got a potential technical pattern coupled with elevated option activity, kind of always something that grabs my attention. Obviously yesterday, and I put in my notes too, there's a lot of headlines going on with Canada right now, as we know, because they're a Canadian company. So, what's catching my attention now is you've got the technical pattern. You've got yesterday what looks like could have been maybe a head fake lower before that pattern starts to come to fruition. And now today you're talking, it's really above its average volume on this bounce. It's sitting right at the highs of the day. Again, we're getting close to that piercing line candle. And just frankly, it's a Canadian company that's up 3.5%. And yeah, as I mentioned earlier, the Canadian ETF, I mean, that thing's still sitting at an 82 on the put call ratio. So, sometimes those things level themselves out as the day goes. This one's basically just gotten stronger. So, I just think it's maybe a potentially interesting name to keep on the radar if we, do get any sort of positive headline. Because if it's battling and up 3.5% today on any sort of good news, you would think that this thing, could see a pretty strong performance.
Oh, sorry, Brandon. I keep trying to avoid that. And like I said, I'm going to be banking the final piece of this S&P with this push right here. So make for a nice trade. But let's talk a little bit about some of the things that you're looking for in the broader market. So, you're looking for at an article over the weekend titled "Options Traders Search for Cover with Tech Giants Looking Mortal." So, for you, this signaled something perhaps counterintuitive, and I kind of want your thoughts on what that article was saying and some of the things that you're thinking about in terms of actions that you want to take.
Yeah, so this article or this conversation probably would have been a little better, 2 days ago before the nice pullback here, because I guess everything in the article is kind of coming to fruition here. So, yeah, like you said, this was an article about signs of fatigue as traders start adding more protection. So, I know the put call ratio has been coming up maybe a little bit more in the chat room, as the volatility kicks in. So, we've seen a few moments that it's hit some elevated numbers. You got days like yesterday where you kind of had a decent climb for most of the day, but never actually hit one. I didn't have a chance here to look at the latest for today. Yeah, I mean, even today, obviously we got the spike in the morning, which you see quite a bit, and it still hasn't climbed back to one since it went below it. So, overall in the put call ratio, we haven't seen a ton of fear, maybe some here and there, but not for the most part. But there are some other areas of the options market that have been showing some caution, and that's what was outlined in the article. So, options costs, probably no surprise here. They've been rising in the second half of February, and they were referencing in this particular article the Mag 7 stocks. So, and unfortunately, at this point, it means that just generally speaking, your portfolio protection using options is going to cost you a little bit more these days. Again, probably not a huge surprise when the market starts going down. If you aren't in yet, you're going to have to kind of pay up for that protection, generally speaking.
Let me ask you something, Brandon. Now, one of the thought processes on the put call is that due to how much retail's been using it or options in general as of late, that the put call ratio no longer gives you the proper reading. Like there's ways that some of the more savvy folks could hide this and draw it down. For instance, yesterday when we were looking at the put call ratio, it was running around zero point 0.9 or whatever it was, and everybody was talking about how it wasn't really showing any signs of concern. However, when you were looking closer at the Dow Jones put call ratio, that was running about 2.6 times, which would suggest some concern. I'm just curious as to your thoughts as somebody that follows options pretty closely. Have you noticed any trends where the put call ratio, at least the one that's generally used by the markets, hasn't been as effective because of retail traders a little bit more involved?
I mean, I think that kind of actually goes back to something that you and I have talked about throughout many of these different calls. You always got to take the put call ratio with a grain of salt. You know, VIX options right now, there's very very high volume on them. I mean, in theory, you and I could trade the same options back and forth all day and drive up that volume. So, I think like everything, you got to kind of just like you were saying, you got to peel back the hood a little bit and kind of try to drill down and find your spots that kind of intrigue you. It's kind of like some of the alerts that I've posted from time to time, like the EWC. You know, there's 32,000 puts traded versus 396 calls. Yeah, again, I'm not suggesting to run out and buy puts on this, but seeing a put call ratio at 82 as we enter the 2 o'clock hour and seeing such a large gap, that intrigues me. That's interesting options activity that kind of grabs my attention. But yeah, I mean, some of the overall numbers, you just got to kind of take everything with a grain of salt. I mean, I've talked about it before when I've seen a put call ratio of 30 and stock's gone up 10% in a day. So Yeah, it's like everything on Wall Street. Gotta put a little a little grain of salt on it. Gavin, did I lose you again?
Let's see, test one, two, three.
I gotcha.
Okay, yeah, yeah. Sorry, no, that was just a little hardware issue that time. Just one of those days, Brandon. So one of the things you're mentioning too was the rising cost of options in the second half for the Mag 7. So, what are some of the things you're seeing there, and what's that telling you?
Yeah, so again, going back to this article, so saying that the Apple 3 month implied volatility reached its highest since September last week. The skew was the steepest since August when the yen carry trade saw a little bit of an unwind and hit the equity markets. So, yeah, basically, when a skew is steep, the options with the strike prices that are further away from the current price on the expected extreme side will have higher implied volatility, making them more expensive. So, this is just kind of a sign that traders are willing to pay for further out of the money puts in anticipation of a big move to the downside. Um, yeah, again, hasn't necessarily been the worst trade when we get some of these nice steep declines, but yeah, I've talked about this before throughout the calls. Just kind of know that for some of those protections, you are going to be paying, generally speaking, a little bit more. So, you will need to get that outsized move to kind of get the returns that you're used to. Just all basic options stuff. But, I know that, for any new traders too, can always be a little frustrating when you get the huge move down and you think you just paid off your mortgage and you really just covered rent for a month. So
Yeah, yeah. There is the wealth effect at play right now, right?
yeah, so um and then kind of another point on that is this is noteworthy because really the last 2 years the skews were so heavily weighted toward the call side. So we saw a lot of scenarios where traders were not only buying like NVDA shares, but they were also adding calls on top of that. And frankly, for a long time that was a pretty good trade. But this strategy seems to be fading. We've talked about Nvidia in particular, the put activity. And this article did state that a buildup in puts ranging from the 115 to the 130 strike has created negative dealer gamma. Now, I would say in the last, since this article was written a few days ago, I would say that there's probably even some buildup on the lower strikes. For example, the 110 puts today have traded 150,000 contracts versus 73,000 on the open interest. So, seeing a buildup there. And, I'm sure if we pull one of our calls from, call it a couple months ago, I'm sure you and I were probably joking about, hey, just go and buy NVIDIA calls and call it a day. So, again, just kind of quite the flip. And I don't want to say a short amount of time, but not a huge amount of time with just kind of the overall sentiment in the market.
All right. Were there any of the Mag 7 names jumping out more than others to you?
No, I mean, I think the Nvidia thing has just been kind of interesting. Again, I think I put this comment, I think it was last week, about how the 115 strike was the most heavily traded contract that day. Saw some really big buying coming into that. And you know what? If you had followed that particular activity, that was a pretty nice trade up until, what, this morning when it bounced. So, yeah, again, I guess maybe the bigger the stock, the more I'm careful with some of that option activity. Kind of finding it on maybe some of the smaller ones. I think can sometimes be a little bit more intriguing just because I don't know. NVIDIA is such a big stock. So, when I read things like, negative dealer gamma, I think we probably all remember the gamma squeeze headlines from GameStop. NVIDIA's just maybe a little bit bigger. I think unless we get a real shock to the system that the dealers involved with writing those options are probably fairly well prepared to handle the situation.
Yeah, yeah, you would think so. So, especially after the Reddit rebellion, you would think that they would have been running a little bit more on the risk side just to make sure that they got everything to cover there.
Yeah, and GameStop was kind of an anomaly, obviously, but shocks do happen. That's kind of how things move big to the up and downside, right? I mean, it's not unheard of, but I think they're probably fairly well prepared in the case of NVIDIA options.
All right. We're keeping an eye out here on headlines too, just in case anything makes the rounds. But one that's kind of catching the attention of Reuters headline: U.S. and Ukraine prepare to sign minerals deal on Tuesday, which obviously would be today. This is according to sources. So we'll keep an eye out. That could be helping provide some of this pop. House Speaker Johnson noting that the continuing resolution text to keep U.S. government funded will come out at week's end. This is something that Carmine and I talked a lot about yesterday. And then an interesting one here: Canadian Association of Petroleum Producers saying that Canada needs policy overhaul to diversify exports beyond North America and into Asia and European markets. So we'll continue to watch these headlines play out in the afternoon here. All right, Brandon. As we go into the final 2 hours of trade and throughout the rest of the week, what's kind of your game plan here?
Pick through all those headlines. I mean, how many headlines did you get in just the 5 minutes we were just talking here? So,
Yeah.
for me, I just right now the path of least resistance seems to be to the downside. I'm not expecting that we cement a trade deal with Canada or Mexico or China this evening. So,
I guess that is the one thing, though, Brandon, that we're looking at on this bounce, right? It's kind of a lot of self-inflicted pain that could I mean all these continuing resolutions they could be done away with in a pen stroke, right? And then it would be curious to see how things come out come out following that, and that's probably the biggest issue that you have if you're a bear, right? The fact that Trump could come out and say, you know what, I don't really like tariffs that much, don't call me the tariff man anymore, something, and markets could potentially rally on that. So how do you deal with that headline risk? Like, is there anything special you're doing to protect yourself or anything along those lines?
yeah, I think just keeping myself in check. You know, very basic, but if you carried some puts overnight into today, I mean, you probably did pretty well. I just remind yourself that the next day might not be the same. It might be up 3%. So I don't want to take every dollar in my in my account and go and buy puts, but yeah, again, I think it's just kind of keeping a very basic trading stuff, just keeping a level head and just not loading up on one side overnight, especially, or just in general, because I don't know, when I get off this call, I'm probably going to go grab a glass of water and the market could move 1% while I do that. So it's just not getting
Maybe you
too
better be better off grabbing a Pinot then instead of the water.
Well, it depends on which way the market moved while I was grabbing my glass of water. Might
I
either
got,
be a Pinot or a Scotch.
I got you. I got you. 2 hours away, my man. 2 hours away. But so all right, Brandon. Well, anything else before we let you get going here?
Yeah, just two quick points.
Yes,
These
sir.
weren't in my notes over to you. These were for some additional things that popped up since I sent this to you. But yeah, just kind of going back to something I posted about earlier, VIX call volume. I mean, 1.3 million, 1.35 million traded on the call side today. So very, very big number. As I mentioned earlier, there was a lot of call buying that's been happening kind of over the last week or so. So yeah, I would imagine that some of that volume's probably some people locking in some profits at this point. And then just one other point from an article that I saw late last night that I thought was interesting. So this had some commentary put out by CBOE, so kind of straight from the source, I guess. Thursday was the second highest volume day on record for buying of high strike, and they define high strike as 50 plus in VIX calls. And there was actually one customer buying over 260,000 of the May 55 to 75 strike calls for a total cost of 10.7 million. So there's definitely, we kind of keep talking which way is the market going, one headline. There's definitely some people buying some protection with those strikes. So again, I think it's definitely one of those times to kind of keep an eye on the VIX and the activity there.
Okay. Yeah. No, that's something we'll definitely be watching here. Um, just real quick, get an alert, Brandon, on Tesla up through that 280 level. This is yet another mega cap name that's bouncing back here at the moment. So definitely a little bit of bullish activity going on here as we get up to that 58.43 level, just shy of the um, session highs. And we'll see how much further this could go. But definitely for me, an oversold bounce, Brandon. I think you'd be in that category too. However, we do want to be kind of aware of things going on and the backdrop just in case anything changes. So we'll be watching out for that. All right, Brandon. Anything else before we let you get going here?
No, I think that about covers it.
All right. Well, as per usual, thank you very much for all the great info. Always a pleasure speaking with you, and you enjoy the rest of the afternoon, and we'll be talking to you soon enough.
All right, thanks, Gavin. Take care.